And how big of an impact with the changes to credit reporting, where positives, proactive sort of credit management activities on your part, so doing things, paying things on time or paying things, in advance, how influential is that or beneficial is that in terms of refinancing? So if you're someone who's had a mortgage for a
Mm.
couple of years and you've been making additional payments consistently and they can see that, is that something that they take into consideration from this rate perspective?
Not
Not
as
really.
big as you would think. I guess it depends. Again, depends what the bank looks at and weighs more. And again, varies from bank to bank because some banks would look at just your credit file, and your credit file doesn't show if you're making additional repayments. It just shows have you got the facility? Is it still open? And are you making your minimum repayments? So if you're just making your minimum payments or putting in an extra $1,000 a fortnight, your credit report's not really going to show that. But if the bank takes a closer look at your statements, your loan statements, some do, some don't, really depends on the bank. And if one shows that, yeah, you're just making the minimum repayments, the other one's saying you're making extra repayments, it could definitely be an impact there. But look, at the end of the day, as long as you're meeting your minimum repayments and have done for your credit report usually shows the last 2 years of repayments. As long as you've done that, then you're okay. If you've missed one, it's not the may not be the end of the world. Banks have a little bit of grace, but it's if you've missed a few, that's when your credit score will be significantly impacted, and you might have to look at other options to get credit, which likely will mean a higher interest rate.